So I think we have at least 10 people who've joined. So let me just start. My name is Mary Gitari, and I'm going to be your moderator for this session today. I am amazed about the topic that we're going to be discussing, mainly because it impacts me. I run a business called Brandspark PR, and tax is one of the things that, like all SMEs, we're always grappling with because there's new information that keeps coming up, and KRA keeps pushing content to SMEs and asking them to update their taxes. And I'm so glad that I know True Quantum, who are tax experts and have been walking this journey with us. And it's actually a privilege to allow them to share this information with other SMEs like us who are asking themselves, what on earth is this minimum tax? So a little bit about True Quantum. True Quantum has vested interest in small business growth. They offer personalized solutions to meet tax and accounting challenges. And they offer advisory services in taxes and also Eric will help me here. They offer a wide range of accounting and tax solutions to small businesses. But one of the things he says he loves offering is accounting hacks, how to do things in smaller, simpler ways. And today he's going to be helping us with that hack on how to make sure we are covering our minimum tax. So the Finance Act 2020 introduced the minimum tax provision, which came into effect on 1st of January 2021 at a rate of 1% of the gross revenue payable by the 20th day of the 4th, the 6th, the 9th, and the 12th month from the year end. So today's free virtual session is for True Quantum to help us to delve deeper into the minimum tax details for SMEs. As housekeeping rules is that please keep your mic on mute. I think now we've had a whole year of knowing how to conduct ourselves on virtual meetings. And if you have any questions, please use the Q&A tab and also feel free to raise your hand. At the end of the session, we'll have a plenary opportunity where we can unmute and speak freely about some of the things that we're grappling with from a tax issue. So today we are joined by, like I said, Eric Kinoti, who is the founder and managing director at True Quantum Consulting. And he's supported by a network of very highly skilled individuals who bring their expertise to each assignment. Eric has 16 years of accounting, finance, and tax advisory and compliance experience. And he has gained a wealth of experience in understanding and dealing with accounting, tax, and finance matters. He's also a member of ISPAC, which is Institute of Certified Public Accountants in Kenya. And he will be joined by Helen Acheng, who is a lawyer and certified public accountant. She has more than 3 years experience working in legal, accounting, and tax fields. And she's also currently engaged as a tax consultant at True Quantum. She has a lot of experience and understanding in dealing with accounting and tax issues. Now, I know all of us are wanting to delve into this, so I'll start by asking a question. We have a poll question today, just to see how invested you are in this issue. As you know, there are two things that are guaranteed in life: death and taxes. So the question I want us to ask or to answer in the chat and in the poll is, what is the role of tax in the economy? Who can tell us? Please click and tell us whether the role of tax in the economy is to support our bloated budget, to pay government salaries, or to build a financially independent country. I'm giving a few more minutes to this. Thank you for your responses. Okay. We seem to have very clever people in the room today. Thank you so much for your responses. I'm seeing many people are actually getting this right. There's some emotions coming in about supporting our bloated budget. Paying government salaries. Anybody? Okay. Yeah, I would vote for paying government salaries. They're always adding themselves some extra cash. Okay. All right. Okay. I'd like us to end the poll. And thank you for your answers. I'm seeing a lot of the people actually got the answer right. Not that I'm a tax expert, but I've been hanging around with Eric for some time, and he'll help us to delve deeper into this as we understand why are we now being asked for extra money from our businesses? Is it to help
So as we continue, I think we lost Mary, but she is joining back shortly.
I think we lost Mary.
Yeah. So I like the answers that you guys gave in terms of ensuring that we build a sustainable economy, which is very good. At least we are starting from the right footnote. Yeah. I can see Mary is back.
Yes, sorry, internet issues. I will now hand over to you, Eric. Please take us through this issue, and all the best, because we are all have bated breath to hear what you have to say. Karibu.
Yeah, okay. Let me share my slides. Just a minute. So today's topic, maybe first of all, to just say thank you for those who spared some time to join us. So today I will not pretend to be the guru in everything because you run your businesses, and I'm happy to also get to know how you've interpreted minimum tax. But with the knowledge and experience I have, I will be able to just share our understanding and what it means. So if I may start. So first of all, to quantum consulting, I think Mary mentioned, but in terms of just highlighting what some of the services that we provide in terms of tax, we have tax compliance, where we work with you in ensuring that you are compliant, both with your monthly returns and annual returns where applicable. This applies from an individual point of view to a business, may it be a partnership, a company. We'll walk the journey with you. Then in terms also of turnover tax, digital services tax, which is a new tax, I think we'll be organizing something soon to just demystify what digital services tax stands for. Then today we are talking about minimum tax. And then apart from compliance, we also assist companies or individuals plan their tax matters. So if you are getting into a project or a contract, we are able to tell you what taxes you should be considering and what areas you need to think about in terms of planning to ensure that you pay the right taxes or reduce your tax expense. Then also we assist companies with tax health checks. I think recently there was a legislation that was passed, what we call voluntary tax disclosure program, where if you disclose your taxes going backwards from 2020 to 2015 June, that's 5 years backwards, and you identify that you have some tax exposures, the government has provided through the KRA what we call a voluntary tax disclosure program, where you disclose the taxes that you owe, and in 2021 you're actually guaranteed a 100% waiver of penalties and interest. Then this is a program that will go for the next 3 years. So next year the rate reduces to 50% waiver, and then in 2023 it goes down to 25%. Then the other, we also help you deal with the revenue authority, where if there are tax disputes, maybe you've been sent an assessment and you do not understand it, we walk with you the journey. And where we do not agree with the revenue authority in terms of fact or law interpretation of the tax legislation, we're able to represent you at the alternative dispute resolution, which we call ADR, or the tax appeal tribunal. Then also for businesses that are exempt, we are also able to assist that. And then we also provide tax training, which we currently are doing with this forum today. So we'll go on today to discuss our topic of the day, which is minimum tax. And the question is, what is minimum tax? Minimum tax is basically a tax that was introduced by the Finance Act of 2020, where the government sought to tax persons, where they tax you at 1% of the gross revenue or turnover, which is to be payable in quarterly in 4 installments. This is the 4th, 6th, 9th, and 12th month. So we'll get into that as we show. So the other, sorry, just a moment. Just been told to. Okay. So a person has been defined as to include an individual, a company, partnership, or limited partnerships, or associations of persons, or a trust. So basically, in law, I know a person is defined to be either a human being or a body corporate. So this section applies to anyone you'd call a person. And then there's the aspect of it's a charge for the year. I know most people have been interpreting it to say it's an advance tax, which is not, and I'll explain why as we proceed. So the reason behind the introduction of minimum tax was just to ensure that every person, and having defined person, contributes their equal share to the exchequer being the government, in ensuring that the services are paid. If you ask me, we still contribute to the exchequer by other taxes that we pay, but that's a personal opinion in terms of VAT or pay as you earn. But this one, we're targeting businesses that mostly are not in a profit position, and they wanted them to ensure that they also contribute. So some of the features of minimum tax is that it is payable whether or not a person makes a profit or loss. So if you're in a loss position, you'll find that in that particular year, financial year, you still pay 1% of your gross revenue. Then if you're in a profit position, we'll be looking at either pay minimum tax or installment tax, which is the second point, where we look at paying the highest. So if installment tax is higher than your minimum tax, again, you'll be required to pay the minimum tax. And installment taxes, which we'll also mention in later slides, usually comes in where you are required to pay your taxes in advance. Unlike minimum tax, which is a charge, installment tax is an advance tax, but which have the same effect. So for installment tax, you'd either pay based on prior year basis, where you compute at 10% markup, then you divide into 4 equal installments and pay at either the 4th, the 6th, the 9th, or 12th month of the year. Or you can compute quarterly your current based on your current performance and pay taxes based on that rate. Then for minimum tax, the person is required to compute the gross turnover as at the reporting date. So you'll find the 1% will be based on your performance. So for instance, if I'm a December year end, where I file my returns by 30th of June, which most companies are, you'll find that my minimum tax, which is due next month, in April, the fourth month, I look at my performance from January to March, end of March, and now compute 1% of the gross revenue or the sales. Then minimum tax is deductible. As we said, it's a charge. So it will be a credit that you'll use at the end of the year. But we'll also explain other intricacies that have been brought in. So when is minimum tax due? I think I've mentioned that. This will be due on the 20th day of the 4th, 6th, 9th, and 12th month. So you'll find that if you have other returns like VAT or withholding tax that you have withheld for the previous month, you find yourself paying together with the minimum tax if they fall for that fourth month. Then again for December year ends, the earliest installment for minimum tax is due or payable before the 20th day of April 2021. Then minimum tax will be applicable on revenues accruing from 1st January 2021. So even companies that do not have their year ends being December, you'll find that you'll be required to account for minimum tax. So if, for example, someone's end of year is 30th June, and their end of year was 30th June 2020, you'll find that effective 1st of January, they'll be required to compute their quarterly turnover and pay the installment tax. I think we'll show by which months those taxes fall in. So what incomes are exempt from minimum tax? So as we note, not all incomes will be subject to minimum tax, and we've listed some of them here, and I'll just go one by one. So income that is exempt under the Income Tax Act. So under the Income Tax Act, we have incomes that are not subject to income tax. For instance, pick most not-for-profit organizations, as we commonly refer them to, NGOs. However, there is a disclaimer: not all NGOs are exempt from income tax. You must have applied to the Cabinet Secretary through the Commissioner for you to be granted exemption, and you have an exemption certificate. Then we can say that you are exempt from your income, or the income you get is exempt from income tax. And this is usually renewed every 3 years. So if you fall in that category, just check whether your income exemption certificate is still valid. And if not valid, then talk to your tax expert to see how they can assist you in that. So then employment income. So for employees who usually taxed and income remitted under pay as you earn, then they would not be required to account for minimum tax. Then income subject to residential rental income tax. Again, that one will also be exempt. Then we have income subject to turnover tax. So there are businesses that are registered for turnover tax, and they usually pay 1% of their gross sales on a monthly basis. Then they will not be required to pay or file their returns under minimum tax. Then we also have income subject to capital gains tax. Capital gains tax arises where you sell a property, and a property would be land, buildings, or shares, where you now be computing the net gain, which is usually now paid at 5% of the net gain, where you take the price or consideration that you pay, you've been paid as a seller, then you deduct the cost of maybe acquiring, improving, and other incidental costs like legal fees, accounting fees. Then whatever gain that you get, that is what is subjected to capital gains tax. Then we have income of extractive sector. This is income around mining sector and oil and gas exploration. So those ones again will not fall under minimum tax. Then we also have persons engaged in businesses whose retail price is controlled by the government. And here we have businesses like, I would pick one, businesses that sell oil or gas or fuel. We always see notifications, especially on social media, where people will start a conversation, where the Energy Regulatory Authority will ideally give us the price adjustment effective maybe a certain day. And initially, we would always have people streaming to petrol stations to fuel to take advantage before the price may increase. So such companies or petrol stations would not be considered to pay minimum tax. Then a person engaged in insurance business. Again, this one will also look at the definition of what an insurance business, because we have agents, we have brokers, and we have the insurance companies. So also income that is subject to withholding tax. I know recently there's been a buzz around digital services tax. So we'll be looking at if the person providing services under the digital services tax, and to pick an example, influencers have been subjected, the income has been subjected to withholding tax, then we'll be looking at when minimum tax would be payable. So it would be unfair to talk about minimum tax without explaining what installment tax is. And I think I'll try to explain that, but I'll just mention. So first thing is that installment tax is basically a planning for businesses to pay your taxes in advance. So unlike the minimum tax, which is a charge on your gross, the installment tax is an advance tax, and it's usually paid into two categories, where we look at prior profits that you had or taxes that you paid. In the, let's say we pick an example of 2020, maybe I paid taxes of 100,000. So in the current year, 2021, installments based on prior year would be 110, because I'm making a markup of 10%, and then dividing it into 4 equal installments. So I'll be required to pay that in the 4th, 6th, 9th, and 12th month of now the year 2021. Then whatever I pay, when it comes to filing my return, I pay that as balance of tax. However, companies that are in the horticultural or what we call agricultural companies and pastoral, then they only pay installments in two portions. So, however, sorry, I think I lost people in a bit. Let me just check. Can you guys get me now?
Yes.
Okay.
We can.
Here we had a small technical challenge, but we look at, so installment tax, you can either pay based on prior or current year, where you look at your performance on a quarterly basis and make the payment of the tax, which at the end of the year, when you prepare your financial statements, you'll be required to offset this amount and then pay any balance of tax that was there. I think on this slide, we have looked at what is exempt, and now we've looked at what is installment tax. So the next thing we'll be looking at, when do we compute minimum tax? So the first installment would be turnover based on your first, second, and third months. So if I pick for 2021, I would expect people to compute their turnover for January, February, and March, and then pay the 1% by the 20th of the month. Then the second installment would be on the 4th and 5th months, because here we are trying to make sure that we pay our taxes on the 4th, 6th, 9th, and 12th month. So I think on these ones, I'll not deliberate so much. And then the balance of tax, whatever you have paid, is what you use to offset. And balance of tax is usually paid on the 4th, by the 4th month from the year end. So if my year end for 2020 was December, I'd be required to pay my taxes by balance of tax by end of April 2021 and file my returns by end of end of June. That is 30th June 2021. So you can always compute that by looking at your year and then you prorate in terms of the months. Again, for agricultural companies, we said theirs will be different. So these ones we usually pay 2 installment taxes. So one will be on the 9th and the 12th month. Then the key important thing to note here is where the total minimum tax paid plus installment tax is less than the actual tax payable after the year end, then here we have where you have a credit. So we'll proceed in terms of minimum tax. My colleague Helen will take us through this. So we'll be waiting for your questions where something is not clear at the end of the presentation.
Good morning to all of you. My name is Helen. As Eric has said, I'll be taking you through the process of computation for minimum tax. I know many of us are asking ourselves now, how do we compute this new tax? We've never seen it before. It is novel, and how now do we compute it and present it in our books, and how do we remit or pay it to KRA? So for this, we thought it best to use an example because, as Eric has just mentioned, that you're supposed to pay the minimum tax on or before the 20th day of the 4th month, the 6th month, the 9th month, and the 12th month. Then the balance of tax, which is the difference, if it's more, you'll pay it on or before the last day of the 4th month the next year. So let's assume you have a company. Now, in this case, you can think about your company or your business or your proprietorship or your partnership. So your company or your business has made sales worth 100,000 in the month of January. Now, this is the turnover, the gross turnover. 100,000 in January. In February, you've made a turnover of 300,000, and in March, you've made a turnover of 200,000. Now, for the first installment that is due next month on or before the 20th for December year ends, your total revenue for the 3 months would be 600,000. So you're supposed to compute 1% of this total gross, which is 1% of 600,000, and you'll get 6,000. So this 6,000 is your minimum tax. That's like the minimum tax value, yeah? And if the minimum tax is higher than the installment tax, then this is the tax that you will file on iTax and remit to KRA. I know they've already updated the system to allow for filing of minimum tax. But remember, if you've computed your installment taxes, as Eric has said, and those installment taxes are more than the minimum tax, then you will have to pay the installment tax. So you either pay the higher of the minimum tax or the installment tax. So some of the considerations that you need to take into account with regard to this minimum tax that we're talking about is that where the sum of the minimum tax and installment tax paid is higher than the minimum tax payable, the excess shall be considered as a tax credit to be carried forward or offset against the final tax liability. So what are we saying here? It means that where you've computed your minimum tax for the first installment and you found that the installment, and you've also computed the installment tax, you found that the installment tax is higher, of course you will pay the installment tax, yeah? But then where you've paid, now you've come and prepared your books of accounts at the end of the year, the accounting period, and you've discovered that actually you're supposed to pay a lesser tax. Then you come and do your totals for the minimum tax and the installment tax, and you find that they're higher than the minimum tax that you would have paid during the year. That excess value can be offset against the final tax liability. But this is now the other point is that where the tax payable, or from the income is greater than the installment or minimum tax paid, you'll have a balance of tax. That means you've paid less tax, so you have more tax that you're owing the government or you're owing KRA. So this balance of tax is what is supposed to be paid on or before the last day of the 4th month following the end of the accounting period. But what happens where your tax liability is less than the minimum tax? So this means that you've computed your account, sorry, you've prepared your accounts and you've computed your profits, your taxable profits, and you find that the 30% tax liability on that profit is less than the minimum tax that you had calculated. So in this case, minimum tax would be final tax. So they pick the higher, which you've paid more minimum tax, but your tax liability is lower. So in this case, they'll say that minimum tax would be your final tax. And remember that you cannot claim a credit for minimum tax. So also, if you're in a loss position, that means you're not liable to pay any taxes. That minimum tax that you had paid during the year would also be your final tax. Now, a person whose tax payable from income is less than the minimum tax shall not be eligible for refund of the excess tax. So what essentially we are saying is, if in the event that your profits are lower than you had expected, so that you have made either a loss or your taxable pay is not equal or more than the minimum tax, you're not allowed to claim this refund of excess tax. This is in contrast to what Eric had said, where if you're paying an installment tax, then you find out that you have paid a higher installment tax compared to the tax that you had paid, then you would be eligible for a refund. So that's the distinction between the minimum tax that we are talking about right now and the installment tax. Eric, you can proceed to the next slide. Now, at the end of the accounting period, you're required to prepare the financial accounts, which is something that is all businesses, I'm sure by now, are doing, and you're supposed to file your returns by the due date. So that minimum tax is filed on iTax and it's paid using the system-generated payment slip. Now, people might be wondering, so how do I treat this minimum tax in my accounting records? So for now, what we would capture as follows. There are two types of treatment. The first one is you debit the prepaid tax asset in the accounts, and then you credit the bank account. But then the alternative option would be to first initially record the tax payable, so where you debit the P&L extract and then you credit the tax liability. Then when you're coming to pay the tax, now you debit the tax liability, which is reducing essentially your tax liability and crediting your bank account. That is the account which the money has left. Now, Eric? Now, of course, we understand that many people have reservations on this thing that we call minimum tax, because some people are feeling that it is very unfair. Others are feeling that it is actually a good move by the government. So there is a pending case, a pending constitutional petition that had been brought before the court just recently, and a certificate of urgency, where various businesses under their associations, I know there's the Kenya Private Sector Associations and the Kenya Flour Council and the Kenya Association of Manufacturers and the Retail Trade Association of Kenya, who are claiming that minimum tax should actually not be charged. And some of the grounds that they're raising is that it is contradictory, as it's charged on revenue, and it does not allow people to deduct their reasonable expenses incurred towards the generation of that particular income, which is contrary to Section 15(1) and 2 of the Income Tax Act, which actually allows taxpayers to deduct expenses from their income. So they are also arguing that this minimum tax would even crush small businesses further, who are struggling to maintain profit. So in that response, KRA is arguing, like we had mentioned earlier, that this tax would ensure that everyone is roped in. So even if they're a loss-making company, you have to contribute to your share of the national cake. So if you're a loss-making company, whether or not you are in a position to pay tax, you're required to pay tax, because it would only be fair if other people who've made profit pay tax, so you also pay tax. So those are the arguments, and the case is currently ongoing, so we won't belabor much on that. But the court will now give a decision on the development of that, on the minimum tax, whether it's going to continue or whether it's not. But as it stands now, minimum tax is payable, and for December year ends, the tax is due on or before the 20th day of April next month. So at this point, I would invite questions or comments which you would want us to respond to or clarify. Back to you, Eric and Mary.
Thank you so much. I feel very informed, and I can see some questions already in, and I think we have quite a bit of time to actually go directly into questions and really understand. Linda Wafula is asking, what is the income subject to turnover tax? Is this something that you'd like to unmute and answer and just ask? We are happy to hear your voice, Linda. Because you have two questions. So you can, Linda, can you ask two questions? Your two questions, unmute yourself and ask two questions.
Hi.
And you can answer.
So yeah, I was wondering what you said there was some incomes which are not subject to minimum tax, and I was wondering what income subject to turnover tax means exactly. What income that is specifically?
Okay, maybe I can answer that. So when income subject to turnover tax, basically the businesses would elect when to pay turnover tax. So, and this would be businesses that have an income of over 1 million, between 1 million and 50 million. And this was amended last year. However, if businesses that do not qualify for turnover tax would be professional firms, those who do consulting, or if they are registered already for VAT. So those are the businesses that do not qualify for turnover tax. And now, which brings us back to, if I can go back to, there was a question on incomes that are exempt from minimum tax. We had actually outlined turnover as being one of them. So if you are paying turnover tax, you'd only be required to pay turnover tax.
Okay, there's a second question which Linda has also asked. Is it possible to pay both minimum and installment tax within the same year?
Yes, it would be possible, because what you'll be doing is that, in my understanding of the law, is that you'll be looking at whichever is higher, minimum tax or installment tax. So let's say the first quarter business was not very good, and your installment taxes were higher than minimum tax, then you'd be required to pay installment tax. However, if your revenues grow and minimum tax is higher than installment tax, then you'd be required to pay minimum tax. However, there is a disclaimer on this one. Given that we have two forms of computing minimum tax or computing installment tax, then I would advise a taxpayer to elect, if you feel that in that particular year your business is not going to do better than the prior year, as a planning measure, we would advise you to go by current tax, where you look at your current performance and you compute your installments based on the current performance.
Okay, thank you so much for that. Faith is asking, great presentation. My question is, if I have not made any sales from Jan to March, can I file nil returns, and for how long will that be allowed?
So our tax system is a self-assessment system. So the Revenue Authority, through the enforcement of the various tax legislation, allows you to do a self-declaration where you look at your performance and declare. So if between Jan and March you've not made any sales, then we do not expect you to pay the taxes. However, would be the question also that we need to think about in your prior year, had you made sales, because installment taxes is also provided. And again, there I would also advise you that you would be looking at your current performance when you are determining installment taxes, so that we avoid a situation where Faith made so much money last year, but between January and March, no sale has come in. Maybe this is your slow period. Would we want to punish you to ask you to pay minimum tax or installment tax when you have no sales? From a tax advisor point of view, I advise you to look at what is my current year performance and base your installments on current year performance.
Okay. Please feel free to continue asking the questions if you've not fully understood, because some of these, obviously, as is answering, they're opening other thoughts and other issues within your business. And the purpose of this virtual webinar is just to ensure that we really help you. That's what True Quantum say. They like to grow with young businesses and to ensure that they receive the kind of support that any large organization would receive. So for Florence, she's asking, for a company whose year end is October, when is the first installment of minimum tax payable?
I wanted to throw that to Helen, but I cannot. Helen, are you okay answering that?
Yeah, I can do that. Okay, so that's if I got the question, your year end is October. When is your first installment tax payable? So if your year end is October, then your fourth month should be February. So then your installment tax, and you see February falls in 2021. Your
That?
pardon?
Sorry,
Pardon?
you can go on, Helen.
Yeah, sorry for that. I think it was a technical hitch. So your year end is October. When is the first year installment tax payable? So your fourth month after October, that is, should be November, December, January, should be February. So your first installment was due on the 20th day of February 2020. If I'm calculating 4 months from November, so that's November, December, January, and the fourth month is February. So on or before the 20th day of February this year.
But I think when it comes to February, the Revenue Authority had not really issued guidelines. So
The
what I would
guidelines, yeah.
suggest is that maybe to look at when you are comfortable paying, because the taxes are effective 1st of January. So you might find yourself being exposed in terms of when to pay. So if I were you, I would look at my performance and maybe just declare if there's anything to declare.
Okay. There's a question that I think it was Florence. She was asking, how long can this go on for? So you declaring nil returns or saying that you haven't made any money. Did you answer that?
Yes, I answered, and I said for her it would be just to repeat, even for the sake of anyone else who would have that question. You are not limited how long you can file your returns, because our law allows you to make a self-declaration. So we have a self-assessment tax system. So based on that, the onus is on you as a business owner or taxpayer to ensure you declare the correct taxes. So if from January, February, and March you've not made any sale, that would not require you to pay minimum tax. However, I said you also need to consider if you're operating or trading in 2020, you'd have been required to pay installment taxes for the first quarter if you are basing them on prior year performance. However, as a tax planning, I would advise you to look at your books and say or prepare your installments based on current year, which would mean you have nothing you sold. So even computing that installment would be a problem. So there you'll be able to avoid the risk of not paying installment and minimum tax at the same time.
Okay. Moses is asking, do you do registration for minimum tax on iTax portal?
I think they've created a section where you just, it's like a Dropbox button where you file directly, you put your revenues, and then based on the revenues, you now pay the taxes. So it guides you on how to go about it.
Okay.
So the other catch is that what people need to note is that as you declare your minimum tax, just make sure at the end of the year, your auditor or accountant make sure whatever you are filing is in agreement with what is on my tax. Unless the variances can be explained, then there would you'd be able to explain if you are ever called upon to explain your details.
And Kithuka is asking, please clarify on agriculture, the agriculture part about installment and minimum tax.
Okay, so our laws provide, when it comes to installment taxes, for normal companies, the installments are paid in four quarters, and that's why we're emphasizing on the sixth, fourth, and fourth, sixth, and ninth, and 12th month for normal companies. But for agricultural businesses, you'll find you'll only pay during the 9th and 12th month. I think the reasoning here was looking at the cycles of farming, where we do not expect to maybe we'll be harvesting quarterly. I know that technology has changed over time. So if you're in the agricultural sector, then you'll be required to pay your minimum tax, either at the 9th and 12th month. So in the first installment, you'll be looking at your performance for the first 8 months. If it's January to August, then you pay your first installment or minimum tax, whichever is higher, by the 20th of the 9th month, which is September. Then the second or last installment will be in the 12th month. So again, you look at your performance for the 9th, 10th, and 11th month. Then you declare either installment or minimum tax. So the rationale is still the same, it's just that for agriculture, we look at only 2 installments.
Okay. I think Victor is one of the people who has already made installment tax in Q1 2020, but he says he ended up with a loss for the year. How does he handle it?
Okay, so as maybe just to begin with the basics, Victor, would be looking at if I was in a loss position, and this is a tax loss position, not the losses that I claimed, then I would not need to compute installment tax, because installment tax has to either be based on my prior year performance, and this is the tax position, or I look at my current year performance, which also affects minimum tax. So if last year you're in a loss, and then this year, the first quarter, you've already paid installment tax, then I would be curious to know, was it based on your current year performance? If yes, then that's okay to pay. And the losses will be told, since there's minimum tax, the losses will be utilized later, but that's subject to more discussion.
Okay. Actually, we're seeing time has been well spent, and Simon Welori is asking a very important question. What is revenue for the month? Is it the money that is actually reflected in the bank account, or total accounts receivable for the month, regardless of money that is paid, for example, in the next month? I mean, you definitely understand what he's asking.
Yes. So revenue to break it down, or to simply put it, is sales. So if I'm in the business of selling books, my sales or revenue for that month will be the sales that I've sold that month, not the money that I collected, because the money that I collected could be either money that is being, maybe someone I sold on credit in December, they are paying me in January. When I'm reflecting my sales or revenue for the month, will only be what I've sold and invoiced for that month. So you'll find that you could have paid, it could have reflected sales, but there's someone who has not paid you. So for the purpose of minimum tax, we'd be looking at the sales. So whether I was paid or not, provided I invoiced, then I'll go by the amount that I've invoiced.
Wow, that's a can of worms right there. And Eric, Helen, thank you so much. I think Are there any more questions from the floor?
There was a
Maybe,
comment on whether we'll be sharing the recording. I think
yes.
we will post it on or share it on our media platforms. So I'll be able to share those in a short while.
Okay, okay. For me, the parting shot is just to, first of all, appreciate your time and helping us to have a better understanding of taxes. The reason why the government actually needs our taxes is to be able to help us to become financially independent as a country. But more than that, Eric, the biggest question on everybody's mind, I think, in this meeting is, are you able to help us to solve this problem? Because if I say that I'm going to KRA's portal right now, figure out how to post the taxes by April 1st, I might miss the deadline because, yeah, limited know-how. Is it very easy, or can we contact you to do it for us? What are the offers that you're making for the people who attended this webinar? Hello, Eric. Okay, Helen.
Okay, yes, we should be able to assist. You can hear me?
Yes, you're disappearing. Please go ahead. We should be able to assist.
Hello.
Go ahead. Yes.
You can. Okay. So I was saying we can be able to help anyone who needs our help. So you just need to reach out via our various platforms, whichever is convenient for you. So, and then we can be able to agree on how we assist you. I know there are two other questions that have come in. Maybe I can just respond.
Yes, please.
So the first one, Victor was asking, would would income be subject to would income be subjected to minimum tax? Either is it invoice or paid invoice? With our laws the way they are, we look at paid when the invoice has been issued, you recognize it as revenue books. So that the point of invoicing is when you recognize it, because the assumption is that when an invoice is received, recognized or accrued in the books, that's when it's assumed to be paid. I know it might sound punitive, but that's how it is. Even for VAT, we look at when the invoice is issued. So that's when we've made that sale. So that's another challenge for businesses in terms of how do you manage your cash flow. So that will be a conversation that we can always have. Then Hannah Gatu had a question. Is there a penalty levied for minimum tax filed and not paid because of invoices billed and not settled? And unfortunately, the way iTax is configured, yes, it would be ideal to file your returns, but you have to pay the tax. I think you are given time. So the same way VAT operates, my assumption is the same way you'll find you being penalized, even though the penalty would be, I think penalty would be, I'd have to confirm that whether 10%, but there's usually an interest of 1% for taxes not paid. So iTax usually gives you a time frame by when you can utilize the slip that you generated.
Okay. Thank you so much, Eric. We've actually just 5 minutes into time, and I feel like we've answered all the questions. Thank you so much for attending, and on Facebook as well, all the participants who joined us, we really appreciate. As Eric has said, this video will be shared on all social media pages, and we want to keep sharing the knowledge about tax. True Quantum is available, as you had, to help you to actually file your installment tax and your minimum tax before April 1st. So please reach out to them so that they can assist. We also have another clinic for digital service tax. And the goal is to help SMEs understand digital services. Now we're all using our social media pages. We want to understand how much is this going to cost us. And as you've heard today, it's just a 1 hour short session. Please invite your friends and ensure that you log on just to understand this. Thank you very much. If there's no other questions, I think we can end. Helen, unmute and say something to your viewers, and Eric, a last parting shot in the next 3 minutes.
Thank you, Mary. I want to say thank you for all the attendees who have been part of this session. We hope that we have been able to at least shed some light on this novel thing that we call minimum tax. And we are happy because you have participated. And if you have any additional questions or queries, or if you want to seek any clarifications, please feel free to contact us, and we are here to help you. So again, once again, I say thank you for attending. We hope you enjoyed the session. Thanks.
Okay, mine, Mary, is just to say thank you again, as Helen said, to the attendees, and also maybe to reiterate this point that when it comes to tax, do not make assumptions. If something is not clear, just reach out to your consultant. And in this case, I hope since we've shared a session, we should built a relationship already. So we are available, myself and my team, to work with you to ensure that you pay the right taxes and not more, not a shilling more. So thank you and have a lovely day. It's not yet afternoon here.
Okay, thank you so much, team. And on behalf of True Quantum, I have been your host, May Gitari, and I have understood a lot today. Thank you so much. Kwaherini.